Good afternoon, traders and investors. We're here for another daily market recap and showing you guys some trades. So let's get into it right away. Not many headlines for today, only the Donald Trump arrest, which really had an influence only on DWAC stock. I don't know if you guys were in that one. I personally didn't play it. But let's get into the indexes recaps, yeah? So on our S&P 500, the daily consolidation kind of continued into today. Yesterday wasn't so much as the NASDAQ. We recovered kind of yesterday late into the day. Today, starting the daily consolidation. So still a lot of space compared to this higher low here. Still a lot of space, guys, that we can drop here, you know, to the moving averages here. We got about, let me see here, about 1.5% to the next moving average, which would be our 12 EMA, which would put us about 50% of this move, right? So we are looking currently for a bit of daily consolidation. As you can see, if I run down the lower time frames here, last week we were extremely overbought. So we were starting to get overbought on lower time frames, anything under the daily, essentially, guys. So you knew that some consolidation was kind of warranted. As you can see on the hourly time frame here, we did lose the 12 and the 26. We're kind of going to probably use it as resistance potentially. And, you know, wouldn't be opposed to setting a tiny little drop off here as a bull flag and then resuming. We do need some momentum, guys. If we want to smash this zone, if you guys want to see some further upside, we're going to need some more momentum because we basically used all of our gas to get up to this level in the first place. Now, if you want to smash it, we got to let our sector rotation play out, right? We got to let our sector rotation play out. Maybe let the technology sector breathe a little bit, have XLF, XLV do a little bit of the heavy lifting. We could consolidate further here on the S&P 500 on the daily. Wouldn't be opposed to it. Still in a very strong weekly uptrend here. Very strong daily uptrend as well. Bulls are still in control. I wouldn't be too nervous here about the bears. Worst, just the most likely scenario here is we're looking for the higher low compared to this low right here. So we want to maybe line it up with these moving averages here. Wouldn't be opposed to that. And as you see, if we do that, then we'd be looking for some more continuation of the upside. NASDAQ, kind of same situation here. Kind of same situation now, 2 days of daily consolidation. As I was talking about, everything under the daily was overbought come Friday, right? Overbought on the 4 hour, overbought on the 1 hour, as you can see right here. You know, so it was just greatly needed to cool off the lower time frames. Now, are we losing the moving averages on the 1 hour? Yes, but here's where you get some time frame confusion, right? Still holding the 4 hour 12 EMA, but on the 1 hour, we've lost it, right? So it shows us some indecision up here. If we want to go retest the moving averages here on the daily, we still have about, 1 to about 2.5% here. Still a lot of space, guys. This is our higher low, right? There's still so much space that we can use to set a bull flag or just come back down, touch this resistance that's now support, right? This major area here. So much space to do it, guys. This would allow us to cool off the time frames a bit more. And the people that have to prove this to us now is the bears. If they want it, they're going to have to really put in some heavy candles here, because as of now, the bulls are still in complete control of the higher time frame charts here. And that's what you really want. You can let them cool off the lower time frames. As long as we still hold the higher time frames and still putting in the higher lows, then the market's just going to resume the upside, guys. I mean, I hate to say it, but that's what the market wants right now. We're short of negative catalysts right now, right? There's not many negative catalysts. The banking system, as we're told, is strong and resilient. How many times have you guys heard Michael Barr say that? Strong and resilient, right? So until we get further negative headlines to the effect that it's not strong and resilient, that's the best catalyst that the bears have right now, right? The best one. China's coming back online, right? After the easing of the COVID restrictions, supply chains are easing, inflation's coming down. We're near the top end of the Fed interest rate hiking cycle, right? There's not a lot of negative catalysts left. The recession, if you guys think the recession, I mean, we can pull it up. The market usually bottoms on average about 6 to 9 months before the economy bottoms, which would perfectly line up with our December and October bottoms here, right? So if we're expecting a recession in Q3, which would be fall of this year, that would be our 6 to 9 months head start. The markets have priced a lot of this negative stuff in. We've been talking about recession since last year. It's only now recently that they've been blowing it up. So markets continue to push up to the high side, right? The one that's kind of lagging behind the S&P 500, right? You see how much space we've created off these lows on the NASDAQ and the S&P 500? The Russell, the heaviest weight in the Russell is the financial sector. So this entire drop here, we were off the lows, but as you can see, XLF really brought us down in terms of its weighting on the Russell. And this is one of the trade setups that I want to talk to you guys later. So we're flirting with the bottom end of this range now. Very important range, guys. This is the bottom, right? The bottom of our 27 to 30% off all-time high range. Still near the lows of it. It's providing some good trading opportunities, but we're really stuck within this range, guys. What we want to see here, you know, this was a nice little move off the bottom. If we can set the higher lows, something like this, and push higher, we would regain the daily uptrend. We haven't had the daily uptrend since here, right? So now about 2 months. This is early February. We're now early April. So we haven't had a consistent daily uptrend now in about 2 months. So that's what we're looking for, right? That's really what we're looking for. Weekly, still stuck in a range, right? But we really want, step number one, is we have to set that daily uptrend. We need to put a higher low compared to these lows, start the movement to the upside, right? Now let's get into some cryptos. So Bitcoin still stuck in our roughly about 2-week range now. Still stuck here. We're at the higher end of it, guys. And, you know, if I was a market maker, because a lot of people say that crypto, you know, sometimes there's some stop hunts and some manipulation going around here. But if I'm a market maker, it stands to argue that at this point, with the amount of people and the bearish sentiments and bearish sentiment in the markets now, it stands to argue that there's a lot more orders to go fishing for up here than there would be down here, right? How many times have they stop hunted this lower level here? Right? They've stop hunted this level already a few times. And then when it moved a bit higher, as you can see yesterday, we came down, clipped that 27,200 level. There must be a boatload of orders up here that if you were a market maker or if you're somebody that has the buying power to really stop hunt these people out, that's where you want to do it. So our next resistance level on Bitcoin is going to come up to this 32,500 level. That's our next area of resistance. If we blow through that, then, you know, we're up to the 35 to 39 level before we hit our next resistance. But that's the target zone that we're looking for here, if you believe in further upside continuation, right? So we talked about the indexes, and crypto's been following the indexes a lot on a correlation basis. If the indexes move up, crypto tends to move up as well on a general relative basis. So now, unsurprisingly, if we're doing some consolidation on the indexes, it stands to argue that crypto is having a tough time pushing through these highs, right? So it might line up to when we finally set the higher lows on the indexes, on the S&P and the NASDAQ, and continue our potential upside move. That's when Bitcoin's going to play along. However, look at Ethereum. We've already broken through the range, right? So these are 1 and 2. Bitcoin has been leading the way this entire move, and Ethereum's been following. But now, Ethereum has said, you know what? Let me do a bit of the heavy lifting. And we can see that on the relative basis of ETH BTC. So as you can see, Bitcoin has been in control of this chart on a relative basis since, you know, for the past entire month. Here it was kind of sideways, so Bitcoin was still kind of winning. But you see Bitcoin really did the heavy lifting of this entire move to the upside, and Ethereum followed. Here it was relatively flat because we were in a range, right? This is our 2-week range on Bitcoin and ETC. As you can see, they weren't moving. But now, ETH is taking over. So, will Bitcoin follow? That's what we have to see, guys, right? Ethereum now has broken our range. Very notable to see that. So it adds the probabilities to our side that Bitcoin could potentially come up and smash these highs here, right? So we're going to keep a very close eye on that for further continuation to the upside. Now, let's get into a few of our stock specifics here. So the major players here, what we're looking for, QQQ, we need it to kind of taper off here because we've been looking for rotation, right? Financials, still a bit crushed. Still out, this is a very good daily move, but we need to be setting the higher lows, the daily higher lows here. for further continuation. So now that's what we're doing. XLV is kind of in range bound now towards the lower end of our, now at this point, 2-year massive range, right? Obviously not a trending market. This is a trending market. This, we've just been stuck in a range. And here we were stuck at the lower end of this range here, right? Now we've broken out nicely. So it's alleviated the pressure on the tech sector. Our major components in the S&P 500, technology, financials, and healthcare. Financials have just been crushed, obviously. So most of the heavy lifting has been done by QQQ because XLV was stuck in a range. So if we let QQQ breathe, our NASDAQ here, if we let them breathe, we need to see some rotation into the financials and XLV. If we don't have any more negative headlines in financials, that's going to be good for our further upside continuation potentially. And healthcare is more defensive, right? So that's why people have kind of been flocking to it with the negative headlines as of recently. It's been a while coming. There's been a lot of accumulation here. We were looking for a breakout, especially on names like Johnson & Johnson, right? Johnson & Johnson and UNH. Getting some follow through here, guys. Getting some follow through. Very nice. So if we're looking at our major technology stocks here, Apple, bulls are still in control, guys. You know, we're still setting higher lows every single day. Now, today's candle is so small, potentially tomorrow we finally get some potential consolidation here, but there's still so much space. This is our lower high. We can still come down 2.5% to hit this EMA here, be sitting on this resistance now turn support area, and be fine. You know, be fine. This would move the NASDAQ down a lot, especially if you see it in Microsoft and Google. But as of now, bulls are still well in control. Well in control. Did we need to cool off the lower time frames, similar to other things? Yes, that's what we're doing. But no real signs of panic here, guys. I wouldn't be buying Apple up here, right? Because kind of getting far away from the moving averages. But I mean, this weekly time frame is just amazing. Absolutely amazing, right? Weekly uptrend confirmed. So now we're looking for a bit of daily consolidation. It's going to line up with QQQ. This is one of the heaviest weights in QQQ. So, you know, everything's going to be kind of lining up there, guys. So bulls still in control, expecting daily consolidation. But as of now, the only sign that I see for it, I mean, bulls are still controlling the 4-hour. The only thing that's kind of giving a hint of it is we might be losing the hourly time frame soon, right? So just keep that in mind. Struggling a bit up here. It's getting harder for bulls to push up here. Microsoft, same situation, right? This resistance area up here, not a massive resistance area considering, you know, where we are and everything, but bulls may be slightly running out of steam here. The lower time frames showed it. We were overbought, right? We're kind of running still some divergence here, right? Higher highs, lower highs on the RSI on the 4-hour. Microsoft, bulls are in control. We still have a lot of space, similar to Apple, right? There's a few gaps down here, but still, I mean, look how much space we have, guys, right? We still got about 2.5% before touching this EMA. There's a lot of space to pull back, healthy pullback here to where, you know, the reason I reference this 12 EMA is because it would be easy continuation. We pull back here like this. Now, if we cut deeper into it, then the most likely scenario becomes a tightening range and gaining more momentum before we can smash this resistance here on the weekly, right? So that's what we're looking for. Bulls still in control. Do we have space for consolidation? Yes, we'll be looking out for it as well as the other major indexes. So that's Microsoft. Google, it's kind of same situation, to be honest with you. Struggling with resistance up here. It's put in a beautiful daily move, guys. This created so much space, right? And now where are we consolidating on the weekly? Where are we consolidating? We're consolidating in the top, right? In the top, what's that? 38%, right? About top 38% of the move. So roughly top 30, 40% of this up move is where we're consolidating, right? Look at this move. We're consolidating now in the top 30% of this entire move. That is very, very, very bullish if you're looking for continuation, right? This green box is just my ideal range for writing puts. So if you want to write puts, if you don't have any Google and you want to acquire some, my personal ideal range for writing Google and building position is in the mid 90s, right? So that's what I look out for. If you guys want to be a bit more aggressive, you're free to do as you please. But considering the fact that we are tightening up here, right, I wouldn't be opposed to writing puts anywhere below, in the 99 to 95 range. That's the range that I personally am looking at for these trades. Expecting a bit of daily consolidation with Google. Google, there's no real news that I can think of that would make Google an outlier compared to Microsoft, Apple, and all the bigger names that require some consolidation, potentially with the NASDAQ. So I'll be looking out for it here on Google as well. Tesla, the one that everybody wants to talk about, right? Tesla, we get rejected off of our delivery numbers here. Is it a bad thing? I mean, we just didn't meet expectations, right? We were kind of guiding for higher. Now, there was some confusion whether we did beat, whether we didn't beat. So year over year, compared to last Q1, it's a very, very big beat. Last Q1, I believe it was about 380,000 cars delivered. This quarter, Q1 2023, about 440,000-ish. If you take out the 2 weeks, quarter was about 2 days shorter, and you had about 2 weeks where Shanghai was shut down, and they're still ramping. If you would have kept Shanghai online, running the numbers, they would have been pushing 460, 470, I believe, somewhere in that range in terms of vehicles. So still, guys, very, very good growth. The caveat was, are they still growing at 50%? Because now for you to redo the numbers, it might seem closer to like 36, 40%, guys. Still massive growth. And if we look at the numbers here, I mean, massive, massive, massive revenue growth. Gross margins still running about 30%, right? Net margins still in lower 20%. But I mean, we're still double, if not triple, the rest of the car industry. And obviously, it's not a car company, it's a technology company, right? Which I still firmly believe in. But gross margins, revenue growth, still there, still ramping the factories. Amazing stock. This is one of my favorite stocks to write puts on every single week. Every single week, because the premiums are so good and the support for price is always usually very good. So what are we doing now here on Tesla stock? Well, same thing as the other things, guys. Everything was overbought. Look at Friday, 4 hour, 1 hour, 30 minutes, right? Severely, severely overbought. So now, if anything, we're just cooling down the lower time frames, guys. We're still holding our EMAs here. This is our higher low to be looking off of. And I mean, as you can see, guys, like the market tried to break this range for 5 days and couldn't do it. So it's a pretty important range here around the 185 level, right? Is there a small gap to be filled here, in the 183 to 185 range? Yes. Am I nervous on the weekly? Not so much, because look, kind of similar to Google, this is such a beautiful move, right? And now we're consolidating in kind of the top 30% of this entire move. If I run a quick Fibonacci on it, I want to make this video too long, but if I run a quick Fibonacci on it, see, we're consolidating, 45, 38% for the most part, right? So we're consolidating the top 30, 40% of this move, which is very bullish for continuation, guys. If we continue to tighten up here, I would not be opposed. They seem to be struggling, right? Seem to be really struggling with its 200 to 215 range, right? So if we couldn't break it, if we would have gotten outstanding delivery numbers, then we probably would have smashed through it for maybe 1-2 days before coming and sitting on support and building a bit more accumulation in terms of shares for further continuation. But now we didn't get the numbers. The catalyst couldn't do it. So what do? We reject off this resistance area, and now we continue to build more momentum, guys. That's what we need. We need momentum. If you want to smash a big resistance area like this, you need momentum. How are we going to do it? By allowing the lower time frames to cool off a bit, right? Our daily's cooled off. Weekly is still bullish, right? So now, as I'll be showing you guys, this is also on one of the trade lists, all right? I'm going to give you guys 3 plays that we're looking at for tomorrow and for next week. The 3 ones that I'll be looking out for. So Tesla, whenever it drops like this, provides us really, really, really good premium to be writing puts on. So still bullish on Tesla. I wouldn't be too concerned unless we really start coming out to the lower end of this range. But in my mind, this is just healthy consolidation, guys. If it continues to tighten up, there's really nothing wrong with that. I know you guys want this to push to 300 right away, but it can't move like it did back in 2021, 2020, not with these interest rates and not with this market environment. So we have to be a little bit more patient with our little Tesla over here, okay? So for the 3 plays that I want to be looking at tomorrow leading into next week, because this week's a bit of a shorter week, the premium on most of these options chains for a lot of plays is not so good for the remainder of the week. So considering the fact that we have daily consolidation potential on the indexes here over the next few days, I want to be looking at these following 3 plays for potential next week, right? Considering the fact that we may be consolidating here on the daily time frames, you know, you may want to go down these strikes if we open lower tomorrow or Thursday, right? So this is just an idea as of current pricing now. So the first play here is ON Semiconductor. Now, ON Semiconductor, the reason why I choose it, look, right? So we're in a very, very, very bullish weekly uptrend. So big support level here between $72 and $74, right? So if we look at it on the daily time frame, we can see that when we move down into this zone here, we get rejected hard. Now it's been 2 times we've been rejecting hard, tightening range here. So I'm looking for next week, we want to be looking at between exactly that range, the 72 to 74. We want to be looking for anywhere between 0.5% to 1% is my ideal range, which gives us about a 20 to 25 delta, meaning that it's a 75, 80% probability of win. Once again, guys, you really only want to be writing things on stocks that you don't mind getting assigned. I don't mind getting assigned ON Semiconductor when it's such a good performing company in terms of average annual revenues and profit margins, growing company. Why am I not choosing NVIDIA? Because there's no support. I would love to do NVIDIA, but there's no support, relative support to be playing off of. The support levels are not strong enough. Why am I not doing AMD? Sure, there's relative support up here, but it's too, like, it's not strong enough, right? There's not enough consolidation here. We're battling with resistance. You know, if AMD were to pull back slightly to like the 90 range, then I might consider writing here for our weekly higher low, right? Around the 87-ish range, but we're not close enough to it, right? When you look at a company like ON instead, you can see, guys, this is much better support, right? So that's why I'm choosing ON for my semiconductor play on the put wheel. Now, we want to be looking at 0.5% to 1%. So that means that if our range is 72 to 74, like I'm showing on the chart, right? 72 to about 74-ish, the bottom area of the range. Look at our 72s. 1% would be 72 cents. 1% of 72, right? $72 if you're writing 100 shares for one put, obviously. 0.5% would be 36. As you can see, slightly above here, about midpoint, about 41, 42 cents here. So that would give it to us. 74 for next week would give us around our 1%. This would be about midpoint of about 72, 73 cents, almost close to 1%. Gives us some room to move. Obviously, if ON opens tomorrow red and we consider and we drop further, you may be even able to get your 0.5 to 1% on the lower strikes, right? It may shift down to here a bit, right? I don't know why the premium shifted like that, but I hope you guys saw the numbers before. Anyways, sometimes it's weird like that. I'll try to use the trader workstation next time, but that's it for ON. Next play, Tesla, right? Tesla, lower end of the range here, about 170-ish, right? To 185. That's where I want to be writing for my tightening weekly range, right? So 170-ish to about 185 in the middle of this weekly tightening range. Very, very good premiums once again. So if we're looking for our 0.5% to 1%, what? Can we get a refresh? All right, let's go. All right, so if we're looking between that range, 170-ish to 185, 185 is too rich, right? Considering the fact that our indexes may consolidate a bit, we have to keep that in mind. It may take Tesla down a bit further. So if we're looking for next Friday, not this Friday, next Friday, April 14th, 0.5% for a lower end of the range would be about half of 170, right? So 85. We can see we're almost there. If Tesla drops tomorrow to 187, 188, you may be able to get your full 85 cents on this strike, right? So that'll be our 0.5%. 1% more risky would put us about the 177.5s. Tomorrow, if we drop a bit, you may be able to find that on the 175s, right? This 175 contract may be $1.70. That's a bit more aggressive. If you want to be a bit more conservative, you may find your 0.5% here on the 170s or the 167.5, guys, right? So 0.5% per week. If you're making 0.5% a week, guys, that's 4% a month. All right, sorry, 2% a month, right? 2% a month, 12 months, 24% a year. That's double the triple what the S&P does. If you want to go a bit more aggressive, obviously you could do in the middle, right? It doesn't have to be 0.5% or 1%. You could do in the middle. But if you're, if you're consistently writing that, you should be beating the S&P at the end of the year. So that's it for Tesla for next week. We're going to monitor this one closely. And our last play is one we've been over, right? IWM. IWM, you want the bottom of this range here, right? 170, 164. Now, since it's an index, you don't get as much premium as you would on a single stock. So let's look. How far can we go, right? I really wouldn't mind being assigned down here, guys. I really wouldn't mind it. You're diversified. It's an index. We're considerably, comparatively to the other indexes, like I was showing you earlier in the video, we are lagging on the Russell hard compared to the S&P, the Dow Jones, and the NASDAQ. So I wouldn't mind for some mean reversion here. If we get assigned here, it's a matter of time, especially if the indexes keep grinding higher over the remainder of this year. Wouldn't be surprising that the Russell does as well. Always got to keep the probabilities on our side. So let's see if we can find something in the 0.5% range to 1% range for next week. Reset the premiums again, guys. Sorry about that. Got to refresh my page. All right. So 9 days out, right, which will be next Friday. Look, right, our 1% would be the 173s. Bit too high. If it was me, if we're looking at this chart here, I would want to get down, towards more of the 171, 170 range, which would be the bottom of this move off the financial crisis, right? So the bottom end of this range here, about 170s. If we're looking at the 170s, that offers us, slightly more than 0.5%, maybe about 0.7, 0.8% here. 170s all the way down. If you're looking for, 0.5%, that would put us around, half of 170-ish would be, about 85 cents. If you're looking for 85 cents, you'll find it here. If Russell comes down a bit more tomorrow with the other indexes, considering we're looking for further consolidation on the dailies, you may be able to find your 0.5%. Or closer, to 0.7, 0.8%, anywhere between the 168s and 170s for next Friday, guys, which would give you a really good zone, right? So 168 to 170s. If you're getting, 80 cents for it, that would mean you take 80 cents off the price here. So you would really be getting it down here. Really good level, guys. Attractive level. Would not mind being assigned here and then writing covered calls on the position. Maybe even letting it ride, depending on how the other indexes are reacting. So that's it for the Russell. That's it for our daily recap here. Hope you guys enjoyed it. If you did, consider giving me a like, consider giving me a subscribe. So I'll see you guys tomorrow. We're looking out for further consolidations, but as of now, guys, no real signs of risk, to be honest with you. I still like these markets. I'm still overall bullish, and I'll catch you guys tomorrow.